Good afternoon. Good afternoon. Welcome everyone to another episode of Joiful's Tips to Financial Freedom by Building Legacies. Want to thank you guys again for joining me this week. I will be going over a few things, but first let me just check and make sure we're streaming properly here. Looks like we are good to go. So, sorry about that. Couple of tips here, just a couple of housekeeping items I want to go over for a quick second here. One, welcome. We have some new people joining, some new groups, some new pages joining us today. So I want to say thank you guys, the Carolina Panorama crew. Followers, I'll tell you a little bit more about myself in a second, but welcome. If you are new here and have not been here before, definitely give me a shout out in the comments, #newbie. We've been going over a couple of things just about the business and things I do, and some, obviously, as I always come in here and say, my tips for the week. So, welcome to the Carolina Panorama newspaper crew. Thank you for joining and logging on today. I know some of you will be watching in the replay later. And with that being said, if you're watching in the replay, definitely also hit me up in the comments, #replay. Let me know where you are checking in from so I can recognize you later. So, and of course, if you're here, definitely give me a comments. Give me a hello, shout out in the comments as well, because we'll be going over a few things, and I am going to get started in just a moment. So looks like everything is good. I'm sorry, I'm having a little glitches here. So I hope you guys are catching this. Looks like everything's still going fine. So backing up a little bit, for those of you who are here for the first time, allow me to introduce myself. My name is Tanita Abraham, otherwise known primarily on Facebook, social media as Joiful Abraham. Carolina Panorama crew. I am the daughter of Nathaniel Abraham Sr., the original owner, publisher of the newspaper and magazine publishing business that he has been in the run for 40 plus years in South Carolina. The youngest daughter, so my brother is Nathaniel Abraham, if you're just haven't figured that out yet. I know I look like my dad, not my mom. I know I look like a mom. But basically what I do every week, my background, I am a financial advisor. I've been in all areas of finance and investing and dealings with the stock market since '99. My most recent role was a financial advisor where I had the opportunity to educate, lead people, help make investment decisions during certain times in their lives. And I just decided in this COVID situation and a certain point in my life that it's time to take some of that knowledge from Wall Street to Main Street, as they say. And so that's why I'm here every week. I come here every week to just give a few tips. I started our Building Legacy School. You may see the website at the bottom, buildoutlegacy.com. That is still in the process of providing more information. Also some classes that'll be launching, live classes, pre-recorded classes, things like that. So definitely stay tuned because that I definitely will believe will be an asset to everyone. With that being said, this week, I'm just going to go over a couple of quick tips that just answer some questions, especially about what's going on now that I normally get throughout the week, especially the last couple of weeks leading up to everything that's going on with the election. I always call it slowdown, September, October, things like that in the market. So you might have picked up on a couple of things that I've talked about or posted on my Facebook page. So we'll go over that real quick. Again, if you're new here, I normally am not on here for more than about 30 minutes. So if you have any questions, don't hesitate to put that in the comments. I will be checking in there as well for some questions to answer, and we will go ahead and get started. One other thing, a couple of shout outs here. One thing that I'm always asked is about my accessories. So I do use VogueMe.com. I do have a coupon code, Tanita A. I will be putting that in the comments as well. VogueMe.com is the website that I use for pretty much all of my spectacles now. Pretty nice site. Obviously some fashionable things. So definitely check that out. Give me a shout out if you do that as well. And most importantly, I also want to give a shout out to my favorite group of people, the Abacus. We have been working on so many things to get the community up to speed and learning about the stock market, investing, trading, every aspect of it, so we can start working together to build our own legacies and become our own financial develop our own financial independence. So that is a program that you guys, I always want to push. If you know me, I talk about the Abacus all the time. And I definitely am a part of that program. So if you're interested, again, send me a shout out. And you can reach me on Building Legacies Facebook page, on that website as well. We have courses going every week or every day, really, at Self-Paced. It's founded by a great man by the name of James Tompkins. And I am under the leadership of a great woman by the name of Leslie Richardson. And I want to tell you, there's some big things going on with that. So definitely send me a shout out, send me some questions about what's going on there. I will be doing a lot more talking about that program and things to come because like I said, it's something that I've seen changing people's lives. It's a great program, I have to be honest. For me to be in the business for 20-something years, I actually learned some things from this program that I know and have even shared with some other people who have been in the business for just about as long as me, and they did not know certain things, and I've actually been able to school them on certain things. I definitely say it is worth every penny, every moment, every second of your life. Everyone that signed up under the class, under me, around me, and other people have been in awe with the things that they learned. And a lot of people have walked off their jobs because everything is about financial freedom. So again, I always push freedom. Freedom is the most important thing. Today, we don't know when and where our employer is going to get rid of us. We don't know when and where something's going to happen. We don't know when and where we may lose someone. All the things that we never knew before. If it's any other time to put that into your reality and be prepared for it, the time is now. As you know that we're in another spike right now. The COVID situation has picked up again. We're getting into the cooler months. You just don't know. Reality is you just don't know. And for those of you who do have a job, it's fourth quarter. You know what happens in fourth quarter the most? For most corporations, budgets are redone. Budgets are redone to determine what kind of money needs to be spent for what is being prepared for next year. If we're still in a situation where financially we don't know where the economy is going, don't know how long this virus is going to take effect on a lot of our, not only the individuals, but the companies because of things that have been going on, how safe do you think your job is? Even if you're doing well in that company, if you're a top person in that company, think about it. If you've been there for years, who are the main people who usually get cut? The people at top. So you just want to be prepared. Not trying to be a Debbie Downer, but I'm just saying trying to be prepared. One of the questions that I have, I'm about to jump on into that. One of the questions that I have quite often is, how do you know when it's time to start investing? And how do you get started investing? Guess what? It's always time to invest. Always. And whether you realize it or not, the things that you are a part of, especially even in your job, your 401k, your pension, even your health insurance, all that money goes right back into the stock market. So whether you realize it or not, even the money in your bank account goes into the stock market. So whether you realize it or not, you're already investing. The question is, how are you benefiting from those investments? And the reality is most people don't know what to do with that money. Most people don't understand their investments. So when I come on here and talk about investing, what to look for, what to be prepared for, those are some of the things I think about. Those are things I'm asked the most. And if you are not investing right now, if you have a 401k, you don't understand your 401k, the time is now to look at that, especially since we don't know where our money is going to be going, how our money is going to be performing, what needs may come up in the next, even the next year. Because let's be honest, the coronavirus situation has already been predicted to take effect through 2022. And we have to be prepared for that because we just don't know. Not to mention other things that we're not going to get into in detail. But we just have to be prepared for that. Another question that I had actually earlier this week, a couple of times, ironically, for different situations, was when it comes to taking money out of your 401k, how do you know if it's the best thing to do? What are the penalties? What are the things to think about? Well, as a financial advisor, of course, my answer to that will always be that's usually the last place you take your money from, because investments in your 401k are designed to be a long-term investment. It is designed to be a situation where you're not going to touch it. You're taking advantage of dollar cost averaging. You're taking advantage of the long-term effect of putting money in earlier in your life so they can grow and compound over 20, 30, 40 years, however you're working. However, situations arise, and I'll never say I recommend it, but I'll also say sometimes there are other factors, like what's going on right now, that mean that you don't have much choice, whether it's a loan, whether it's a withdrawal, whatever the case may be. If you're going to take a withdrawal for mortgage, insurance situation, whatever the case may be, that's absolutely necessary, and you've spoken to your tax advisor, you've spoken to your financial advisor. If you don't have a financial advisor, your 401k, your employer's 401k administration company has people that are on staff to give you some guidance of the do's and don'ts, the things, whatever the plan administration has decided as an option. However, the IRS this year allows you to take money out of your 401k without the penalty. Now, you will be taxed. It is considered income this year. However, you won't have to worry about the 10% early withdrawal penalty. Now, the bad thing about that is, depending on what your income already is, if you're taking money out of your 401k, then of course your income will be higher. Your tax situation may be different, especially with the change in tax laws last year. So there's always a catch-22 there. However, if money is needed to survive, you're probably not already working anymore. Your income is lower. So it may be something to consider to keep you afloat, to hopefully in that situation, you find another job, you're trying to take care of your home, things like that. So typically one of those common questions, especially I had this past week. Another situation I've been asked, which has been common, is if it's okay or if it makes sense to take money out of 401k to buy real estate. I would say in most cases, yes and no. Again, it does depend on your specific situation. So you definitely want to speak to your individual financial advisor, as well as, more importantly, your tax advisor. Because obviously there's going to be some repercussions when your taxes are involved, as I just mentioned. And also, it does have a long-term effect on your retirement income when you do retire. Because remember, your 401k and your IRA is set aside for the sole purpose of providing income for you when you don't have any other income when you get older. So when it comes to that, you want to make sure that you have everything in line. If you do have to dip into those accounts in the meantime, and especially if you're not a savvy investor or things like that, you may hear people talking about, I don't take money out in a day trade. You can do that. However, remember, your long-term funds already have been set in at a certain amount. And if you are just starting day trading, you definitely don't want to risk what's already solid to take that risk in the market. That's another conversation. But more importantly, if it comes to real estate, if it comes to things like that, I don't necessarily recommend it. I wouldn't recommend it anyway to anyone, as I'm just here to give you some education, some tips to think about. However, there are certain circumstances where it may be more beneficial for just if you're using it for income in the future also. So again, definitely speak to your tax advisor, your 401k plan, company administrator to go over the do's and don'ts, the rules, how they report that, things like that, and also your tax advisor more than anything. So in that order, financial advisor if you have one. If not, whoever the company is that your funds are held with, they have people on staff that have to be educated to have conversations and answer certain questions so they can give you a little more personal guidance. And then the most important person that should have the best answer on how that's going to affect you now and in the future would be your tax advisor. So that's number 2. Number 3, my third, probably most common question would be, what do you look for when you're trying to choose a stock to buy? And this question is a little bit complicated because there's so many things that we do as investors. There's so many things that we do as traders that are completely different. But I would say the most common thing that you look for in anything, and another thing we learn in the abacus, is fundamentals. A lot of people go in and hear news, they jump in and they take out their 401k and they buy this company, or they buy this new company, or they buy, and right now, especially in the markets now, a lot of people have gotten burned. Simply because you cannot predict what's happening. And you just don't know what companies are going to be around after now. Let's just be honest. The companies that are doing well now were able to just happen to be lucky in the market. Zoom, for example, Amazon, for example, Shopify, like those type of online companies, e-commerce companies that have already been established as of being beneficial to you when it comes to being home. Lowe's, for people who are kind of shifting to being at home more often. Auto companies, because people are traveling more in car than in airplane. All those companies were in a situation where they happened to luckily be in position to be able to shift quickly. However, there are companies that didn't necessarily they weren't necessarily already in that industry. And so whether or not they survive depends on what their cash flow looks like. And we've seen, especially on the retail side, there are a lot of companies that may or may not be here in the next couple of years because their financials, no matter how popular they were not in a position to withstand keeping employees on staff, keeping inventory, all of the bills that they have to take care of to run, to be productive, to provide income, and also maintain that when they can't, because they don't have enough cash on hand. So the number one metric that we look for, or one of the number one metrics that we look for, I would say, is cash on hand. How cash liquid is that company? And if they don't have the cash to maintain any type of emergency situation, just like you and I, then they will suffer. So you got to remember, companies and their stock is really no different than our situation. We have to have a budget to maintain our what our mortgage is going to be, what our rent is going to be. We have to keep up with our car payments. We have to keep up with, whatever credit card bills we have, all of whatever money we're saving for retirement, health insurance. Just like we have our expenses every month, so do those companies. They're entities. Entities are treated as people. So the same thing happens to us, happens to them, just on a larger scale. So keep that in mind when you're looking at stock. There are a lot of YouTube channels, Facebook groups, Instagram pages that are pushing hard certain stocks without any information behind it. Make sure you do your due diligence, because I don't want anyone, I've seen too many people go in there and I hate to mention names, but Hertz, for example, who are just going in, just buying stuff on news, and then next their stimulus check is gone, or the money they took out of their 401k is gone because they didn't know what they were doing. So one of the most important things to look for when you're looking into companies is really understanding how to learn the metrics. Metrics being what are their financials, how they operate, what's going on in their industry, how's it affected by the economy. All of that kind of stuff is what's most important in helping you make a decision. So if something happens like we have going on right now, those companies have the backing to survive. So even if there's a dip, even if their stock goes down after you buy it, Apple, for example, when they did the split, a lot of people bought Apple and the stock has been going down. However, Apple still is probably one of the most heavily traded company on the exchanges because of who Apple is and their metrics and their cash on hand and their availability to go to the markets to generate more capital, all of that. So keep that in mind when it comes to choosing companies. You definitely don't want to be a new trader, a new investor, and go in there and buy stuff just solely off of what you thought might be good, and based on some news that came out, because news comes and goes. If you reflect that back to our own lives as well. A lot of things happened earlier this year that we thought was going to change the narrative, and here we are still dealing with some of those things. And we bet on that, and it did not. Nothing's changed. So same thing when it comes to companies in the stock market. And the most popular question I've had recently, which will be my last one for today, is how do I phrase that? Basically, overall, I kind of sum it up as, how is the market and the economy different? If you've been following for a while, I've always said that the stock market and the economy are two different things. There's some correlation, obviously, but it really is two different things. So just because the stock market is doing well or not doing well doesn't mean the economy is doing well or not doing well. Is also, you have to remember that the stock market is driven by institutional dollars. As I mentioned earlier, institutional dollars meaning your corporations, where you bank. Those banking companies have millions and billions of dollars that you are being sheltered for whatever reason from their own clients. Your life insurance policies, they are invested in the stock market. Obviously, we know about hedge funds. They're invested in the stock market. Most of your college institutions, their funds are invested in the stock market. So you and I are a small, small piece of the pie. And so when it comes to what's going on, and you think about it from the aspect of the larger companies and the major institutions, the 1%, the 0.5% of the investors in the world, basically the rich, do they really care about who's in office? No. There's some factors that are going to affect anyone's account, no matter whether we are blue or red. But the reality is the stock market mostly moves by volume and activity, what's going in the market on a daily, second basis. We have no control over that. While you and I are asleep, these major institutions are trading. They're moving the market. Today is a great example of that. Last night, the market was showing it was going to be up, it was doing really well. And then right before the market opened this morning, the market reversed to a different direction, like we were going to be down today. And we've been kind of back and forth since the last time I checked. The reason being is because those large institutions are trading and dumping money in the stock, buying in, and the stock price up, selling. That's how the stock market works. It's not you and I. It's not, as they say on the news a lot, the Robin Hood traders. The Robin Hood traders still don't have the amount of wealth of a company, a major institutional company. So if it's you and I that are day trading, or some of my friends are day trading, that you see online on YouTube, all of that recently, the money that's being put on those accounts, no matter even if they're just millionaires, do not compare to what a Morgan Stanley institutional investor is trading with. I can say that for myself, even working at my first company where we were day trading. Those blocks of shares, the orders that we had to put in, I'm talking about millions of shares at a time. You and I aren't trading millions of shares at a time. I hope. I mean, if you are and you're following me, great. It makes me feel good. But I've never known anyone to trade millions of shares at a time, especially not unless it was maybe a penny stock. So you have to keep that in mind. What is being controlled? You have to change mindset and the difference between you and I, what we're fed in the news, about how things work and the reality of how things really work that they don't want us to know. This is why we have to take advantage of what's going on in the markets, what's really out there, doing our own due diligence, doing our own research to make sure that in order for us to make the decisions that's best for us, we have the information to know when it's time to hold on or move things, cash in your 401k. We have the information to know what stock that we can buy that may appreciate quickly and make a quick dollar out of it, maybe pay an extra bill. We have the information to know to do pretty much what these institutions are doing on a large level with our money, so they can make money to do whatever they need to do for us, but we could do it for ourselves as well. So no, does the wealthy really care so much about what's going on in politics? Yes, to an extent they do. Not so much as they want you to think, simply because money really controls more of that anyway. It's a capitalistic society, it's a capitalistic situation. And at the end of the day, if you think about it this way, I've always made comments, well, not as often, but I've made comments where if the market is down, I can still make money. I just bet on the specific stocks going down. I had orders in this Tuesday on stocks going down. It went down. I put an order based on it going down. It dropped. It started turning around. I sold. I made a few $100s. That's what day traders do. So if the market is moving, if the market is open, if a day trader is making money doing it that way, that means the institutions are making money doing it that way. That means that it doesn't matter whether the market is up or down. Money is always moving behind the scenes. And so therefore, if the election happens next week, is it really going to have a huge effect on the market? It may affect the direction where the market goes, but it's not going to, the market isn't going to go away. And that goes to your 401k account. They aren't going to go away. They aren't going to go to zero. They shouldn't, especially your retirement accounts, if you're doing what you're supposed to do. So keep that in mind. With what's coming up, what's been going on, the virus, all the things, the worst case scenario isn't necessarily going to put you in a situation where you have to worry about losing everything. No, if you're in a 401k with your employer, there are parameters that are there that weren't there 20 years ago that will protect you, where your company has to have you in investments offered to where most of them are funds. You're basically mutual funds, or what we call fund of funds, that are not going to allow you to go to zero, because they have to be what's called diversified. We'll talk about that a little bit more. So should you be concerned? I won't say you should be concerned and pay attention. We should always watch our accounts. We should always watch our investments. However, is it time to jump and move off of every little shift in the market? We had a downturn today. Was the crash? I hate to hear people say it's a stock market crash. No, we have not had a crash since the banking situation. Before that, the tech bubble. We are in some corrections based on what's going on, not necessarily even the economy so much, but fears of the virus, of what may come. Those days are not here yet. Hopefully they won't be here, but the reality is that I would have to say yet. So again, do your due diligence, do your research. When it comes to your retirement plans, every institution now, compared to when they were 20 years ago, has something on their website, especially your employers, where they are required to give you some education about your 401k, about how it works, about your options, all of that. Same thing with your retirement accounts. If you have an account at Fidelity, if you have an account at Vanguard, if you have an account at E-Trade, all of those companies are now pushing the education side as well. Take advantage of that. In addition, sign up for some other programs. Your Bacchus program, again, is a good program. I'm always going to come back to the Bacchus. Building Legacies has other classes as well. There's always information and reliable companies out there. There's some free apps online. There's some free YouTube pages that talks about things, just like this one. This is a YouTube channel. So definitely do your due diligence. Definitely remember to stay on top of your investments. Things will be changing again here soon. So as the market starts to change and shift and I start getting some more comment questions, I definitely will be coming on here to talk about it. And I'm grateful that your questions have been coming in. I appreciate that. So we will continue to come on probably on Thursdays now, because Wednesdays is not working for us in this household, which is fine. We have to shift, so we're shifting now. But again, if you are new here, join our page. The website below has to sign up for some newsletters that are going to start coming as well. Follow, like, share, share with your friends, tag a Newt, tag a bestie. We'll be sending some more information every week, probably more often, maybe a few times a week going forward. And I thank you for joining us. I'm going to go ahead and shut down. It is now 30 minutes, and we will catch up another time. You guys have a wonderful week, and thanks for joining.